Hey, this is Rajat Bose here. It's better late than never. We promise that even if we are not uploading the video, weekend stock recommendations and market outlook video on Sunday 10th of September, but we are going to do it on Wednesday 13th of September. It comprises 3 indices as well as a few stock reviews. Watch it. Now is the time for the index discussion. We are going to deal with Nifty, the Bank Nifty and the cnxmidcap, which is leading the charge. Yeah, we are going to discuss Nifty now. Nifty, we are using the data at the end of Monday, 11th of September. Nifty on this day, it's a landmark day for Nifty because it crossed the 20,000 figure. 20,000 level has been breached by the Nifty. Of course, at the close, it ended at 19,996.35, but it posted a high of 20,008.15. So, first time ever, Nifty has scaled up to 20,000 mark. So, things are looking bullish in the sense that this is the third week that has begun where Nifty is actually showing upswing, and now once it crosses say 20,050 level, actually move up further. Immediately, if the rally continues from here, there would be a strong resistance around say 2390, 20,400. This is 2.618 times of the last fall, last major fall in the Nifty on the weekly chart that happened during the COVID phase. After that, this bull run that began, that last downswing that started from 11th of February and ended on 23rd of March 2020. We have taken Fibonacci projections from that, and the 2.618 times of that fall comes to 2390. So this will be a major target for the Nifty. Immediately going beyond that looks unlikely. Now we come on to daily chart. Daily chart shows that it is actually a very strong kind of an upswing that has begun on the day of 1st of September this month. Beginning of this month, we saw the beginning of this rally. The rally still continues. The rally started from the low of 19,255. From there, we have already come more than 700 points in sort of 11 calendar days, and in the process, as we have just noted, that it has crossed the Rubicon of 20,000 mark. But again, we are actually looking at a movement on the upside. Here on the daily chart, there is a 2.618 times Fibonacci level at 20,248. So after this 20,000 mark, these are the two key resistance level. One is 2249 or 2250, and the other one is 2390 or 2400. So till such time 2250 to about 2400 is not taken out decisively by the Nifty, we must respect this this strong resistance zone, projected strong resistance zone on the basis of Fibonacci. Now we look at the Bank Nifty chart. Bank Nifty, we begin with the daily chart. The daily chart shows that the last 3 sessions, that is the last Thursday, last Friday and Monday, these 3 days, there had been green candles and the index is moving up. There had been gaps in between, at least from the closing to opening levels. That kind of gap is there. So Bank Nifty is definitely showing some strength, and there is a possibility that once it crosses this 45,570, 45,600 range, it might even go up further and scale up to the earlier high of 46,310. If the rally continues, the high that was made on 27th of July, Thursday, for the Bank Nifty at 46,310, that might be rescaled, because Nifty has posted a new high, so this could also do the same. As of now, unless it falls below 44,315, 44,300, Bank Nifty will continue to remain bullish. When you look at the Bank Nifty weekly chart, you find that Bank Nifty has been rising for the last, this is the third week the Bank Nifty is rising, and immediate target, as I said earlier, that 46,700 is going to be the level to watch out for, because around that level the high was posted, and that high is likely to be rescaled. So long as even on the weekly chart, unless the Bank Nifty falls below that 44,300 mark, it shows that it is unlikely to become bearish anytime soon. So Bank Nifty on the lower side, you have a major support around 44,300. On the way up, once the 45,900, 45,990 kind of range is breached, then it is actually headed for 46,000 plus levels, to about 46,700. 46,700 would be the key resistance to watch out for in case the Bank Nifty continues on its way up. And on the downside, unless 44,300 gets taken out, it would maintain its bullishness. cnxmidcap has been on a tear. cnxmidcap weekly chart shows that it's almost countless. There had been one red candle in this whole thing. Other than that, right from end of March, early April to current date, cnxmidcap is always going up. It is maintaining a phenomenal upsurge, but this is getting considerably overbought. The journey started right around the level of 30,000. From there, it has come to 41,444. That is the last closing level. Roughly, you can see that it has moved up from the lower levels. It has nearly moved up by about 35%. 35% move in 4 months kind of time. This is a huge run. And if you check out the small cap and mid cap stocks, most stocks are highly overbought, and this is the time actually one should book profits instead of getting into new mid cap stocks or new small cap stocks that will become multi-bagger and stuff like that. That is the rumor mill generates that kind of ideas. But prudence calls for profit booking in mid cap stocks, despite the fact that it is showing relentless upsurge. But at least part profit taking, 50% selling off, that kind of thing, if you are making good money in mid cap, you should be doing. The daily chart also shows a similar pattern. You have seen this gradient has moved up. From middle of August, and earlier the gradient was somewhat like 45 degrees, and now it's moving up at a 60-degree angle kind of thing. So this is definitely calls for some profit taking, and please be very careful if you are entering a new mid cap or small cap stocks at this juncture. It could be fraught with danger. Now we are presenting stock reviews. That includes Naukri and one or two more stocks. Just watch it. This week we are reviewing 4 stocks, including the one that we missed last week, Naukri, and we didn't. We would definitely cover Naukri in this episode. But we are starting with the PSU stocks. We are starting with REC Limited. Look at the weekly chart. Look at how it has behaved from the middle of last year. Around last year, July, it has started its move from the level of 80, and throughout this year, this has been rising. That was a very healthy rise up to, say, July. A little earlier, June, July, the movement was pretty good. It went up to something like 120 plus. But from there, this 150, 60 points, from 120 to 280, this run is a very vertical run. On Monday, that is 11th of September, it started at about 273, went up to a high of 284.70 and touched a low of 270.45, 269.05, and finally closed at 270.45. So that being the case, that means at higher levels it could not sustain. It is kind of an inverted hammer, a spinning top kind of formation on both the daily and the weekly chart, because we are taking only one day, that is Monday's data. Based on that, this chart is constructed. So the daily and the weekly, last daily or weekly candle will be the same. Here it shows that at higher levels, people have started booking profits. We also suggest that you book profits. Look at the moving averages. It clearly shows that you have a problem. The REC daily chart also shows that it is taking a pause and then again started rising. In between, there had been one day sell-off, but that sell-off did produce a huge volume. Yet after that, on last Friday, there was a big jump from say about 250 level to 270 level, and again on last Monday, that is 10th of September, it posted a 15-point run, but completely surrendered the gains to close at 270.45. It calls for booking profits. This is highly overbought. At least part profit taking is definitely needed. PSU stocks are highly overbought. Most of the PSU stocks, you should be booking profits. Just as I said in case of Rural Electric Corporation, you see the chart of Power Finance Corporation, another central PSU. This has started moving. Now we are looking at the weekly chart. It is just say about month of September 2022. From there the journey has begun, and it was a moderate pace journey up to say June this year, and after that even the Power Finance Corporation has started moving up in a strong manner, and it is showing overbought signals. You can see that the RSI has reached a level of 85.49 on weekly chart. So it is clear, it is suggesting that at least some profit should be booked. From the point of view of the moving averages, it is definitely getting supported by 9-week moving average, but look at the 20-week moving average and the 50-week moving average. They are far lower. So a correction is definitely in order. Chances are that can begin at any point in time. So one should also book some profits in PFC. Public sector undertakings, PSU stocks are highly overbought. Be very careful of taking an entry at this juncture. In fact, these levels are the levels to book profits. looking at the daily chart, you can easily observe that there had been a 50-point move between last Thursday and the Monday this week. A total move from about say 258 to 313, roughly a 55-point move in in these three trading sessions, and the stock is going berserk. It is moving up. There is a split pending. Whatever be the development, I would suggest at least booking part profits. If you like my presentation, press the like button. Subscribe to my channel. Also, share the video to others. And don't forget to press the bell button so that you get the notification whenever I post a new video on my YouTube channel. Thank you. Our third stock, Indian Railway Finance Corporation. Indian Rail Finance Corporation we are discussing. Initially we are looking at the daily chart, in which you just see the last on the chart the last 6 trading sessions. In that 6 or 7 trading sessions, in that there is one red candle. That is the only corrective move. Otherwise it is jumping from 50, and there is a 70% run in 7 trading sessions. From 50 it has moved up to 85. 84.75 is the close. So even Indian Rail Finance Corporation is a PSU, and that is going strongly going up as if there is no tomorrow. Huge volumes have happened in some. In one of these days, the volume figure went to something like 16 crore plus shares. So this is some kind of an euphoria, some kind of missing the bus kind of a thing. That is, fear of missing out seems to be capturing the imagination of the PSU stock buyers. But this is a dangerous phenomenon. This kind of vertical runs normally do not sustain. So chances are there would be a sharp correction too. It definitely calls for at least some part profit taking, depending on your situation. And if you are planning to enter into this stock, please be a little wary. One should enter into this kind of a stock only after a substantial correction, not right now. Now look at the weekly chart of IRFC. This is like a skyscraper. This is a weekly chart, and this looks like a skyscraper. The way things have moved up from the level of 30 on the chart, just look at it. From 30 to 84, the run has been pretty much vertical. It is as if a skyscraper that has been built up, and the last phase is dangling in the air. The last Monday's trading, it was a gap up opening and gap maintained throughout the day. It also calls for some profit taking. Generally, it is time that we booked some profits from the PSU stocks, if not totally, at least partly, if say about 30, 40, 50%, whatever. And please be wary of getting into this kind of stocks at this juncture. It could create problems. Now we have come to our fourth and final stock. This is the stock that was supposed to be reviewed last week, last episode. We could not do that, so we are doing it right now. This one has suffered a correction from early August and to say middle of August. It went down to something like 4,200. We had been suggesting in a previous review, we said that at that point of time the correction just began. Then we said that once it comes close to the 200 exponential moving average, which was then around say 4,000, in between 4,000 and 4,100, it did not exactly touch the 200-day moving average, but 200 exponential moving average, I mean, but very close to that level it came down to and started moving up. And now the moving averages are also changing direction. 9-day moving average has already moved up. The 50-day has become flat, and 20-day moving average is about to change course. So chances are that this corrective upswing that is happening at the moment is going to continue. So we are going to test the situation on the weekly chart. If you look at the weekly chart, then you see the base formation, an initial attempt to move up. From here, if it starts moving up and crosses the 5,000 mark, then there would be a good opportunity. Such kind of cases actually see good appreciation on the upside. Here, if Naukri were to cross 5,000, it can move up to something like 5,500 to about 5,900, and from there, if further move happens going forward, then we can see 6,500 to about 6,800 levels could well be scaled up, because the formation is such that the 200-week moving average has not been decisively taken down. I mean, this acted as a support, and then all the moving averages have turned. The 9-week moving average has been supporting. Now it has the stock suffered a correction, and after that once again the 9-week moving average has been reclaimed, and other moving averages are also supporting. So watch Naukri, there could be a buying opportunity going forward. Sorry, this week we haven't included any stock recommendation. The simple reason being it is a truncated week for us, only 3 days we are covering. So in the next session, definitely you will see stock recommendations. Now, if you liked my presentation, press the like button, subscribe to my channel, and share it among others. And don't forget to press the bell button so that you get the notifications from YouTube whenever I post a new video.